Welcome, friends. My name is Avinash Gorakshakar, and I welcome all of you to another interesting episode of Konaxia High Flyers. Friends, as all of you are aware, we introduce emerging companies from emerging sectors and make it a point to talk to the promoters and the top managements of such companies. This helps us understand these companies better via their company's business model, their growth journey, their future growth plans. And in this process, a lot of valuable information is provided by the companies, to us, and this helps all our investors to take a very conscious investment call when they invest in such companies. And friends, today we have got another interesting company to discuss. The company's name is Exim Routes Limited, and I have the privilege of having the CFO and the Chief Commercial Officer, Mr. Anshul Bansal. Anshulji, thank you very much for your valuable time today.
Thank you so much, Avinash ji, and good morning, good afternoon, good evening to all our viewers who will
Yeah,
be seeing this podcast.
yeah. So Anshulji, first question, which is very basic, if you could start by telling us, what is the broad business model of our company, and what is the positioning of our company in the domestic market? And one related question to this is, Anshulji, is this a family-run business or is it a first-generation company? If you could tell us something on the business journey, how did this business start about? If you could please tell us.
Yeah. So first of all, Exim Routes, it is quite a unique business. We are a recyclables exchange platform company. First generation, it was founded by a promoter, Mr. Manish Goyal, back in 2013 when he started this as a proprietorship firm. A little bit of background about Mr. Manish and the company. So Mr. Manish is an IITian from IIT Roorkee, 2008 pass out in a very obscure branch that people would not even know about, just pulp and paper engineering. It is the only IIT that has that particular degree, right, in pulp and paper engineering. And the other unique thing about Mr. Manish is that, out of the batch of around 25, 30 people, he was the only one who actually went into this field post graduation. Right? All of his friends went into other industries like IT and management and all of that. And he started his career with Walmart, which is an European company, one of the largest paper machinery providers in the world. And very as you call luck might have it, he got to be a process engineer and commissioned paper machinery for some of the largest paper mills in India as part of his first job experience. And that is where he discovered a very glaring problem when it comes to sourcing for Indian paper mills, that Indian paper mills are reliant on recycled paper, or as you know, the common person would think waste paper as a raw material feed. Right. So if I give you some background, India overall has around 550 to 600 paper mills. Majority of them, and when I say majority, I mean like 90% plus paper mills are recycled paper based. Right? So they need recycled paper as a raw material to produce finished goods, be it your copier paper, your tissue, your duplex boards from which you make these Amazon boxes as an example. So roughly, there's a need of around 12 to 14 million tons per annum of this recycled paper as raw material, right, for the Indian paper industry. And for a myriad of reasons, the domestic market can only supply around 6 to 7 million of that. The reasons being, India's recycling rate is only 20 to 25%, versus if you compare it in the West, Europe and US is 60 to 70%. The quality of the fiber itself is lower versus the West. Right? So myriad reasons means that there is a inherent dependency of these paper mills to import paper, right? And that idea was the genesis of Exim Routes. He spent the next 4 years from 2013 to 17, 18 in learning the trade, the supply chain, the challenges, right? Himself as a proprietor. And then he established Exim Routes in its current way and shape and form. So he made it a private limited company in 2018-19 and opened up Singapore as our first subsidiary. Right. So very humble roots, starting from one subsidiary, less than 5 people in 2018-19. And over the last 5 years, has seen a massive growth. So today we have 5 subsidiaries with India as a whole core, 15 plus employees. We source from 15 plus countries, 50 plus yards, and count as some of the top paper mills as our customers, right?
Okay.
So we'll talk more about it, but that is essentially, about the journey, the business journey of Mr. Manish, and what Exim Routes is, right?
Oh, fine. Sir, can we assume that the main product for the company Anshulji is basically waste paper? I mean, can this understanding be right?
Yes, it is right. And if I can talk then a little bit about our USP is what we have created. See, all of us are engineers. If you look at the senior management team, all of us are engineers, very data-driven people. So one of the things that we have always done in the last 5 years is collected a lot of data. You have to understand that this entire supply chain is very manual, offline, efficient. It doesn't really operate on data. So what we have done over the last 5 6 years is ourselves collected a lot of key data around the industry, things like the inventory of the yards. What are the yards? What grades are they supplying? What quality of paper do they have? Indian mills, what do they need based on the machinery and the finished product they're producing? What do they need? Quality metrics, right? Very simple example, if I give you moisture, right? Higher the moisture, lower the yield, right? It's just basic cost optimization. But stuff like that, a lot of quality metrics coming. We have that data. We have got freight data. Right? This is international import export, especially with COVID and all the supply chain dynamics. Freights play a very, very important role in this value chain. So we have built a lot of this data, and when we talk about our technology platform ERIS, which I'm sure we'll talk about, that data and foundational layer is what has enabled us to create our technology platform. So whilst yes, absolutely, today our focus is on paper, which in India itself is a 15,000 crore market. Absolutely, that is the primary focus. What we are building is more foundational and can be applied to any recyclable import export supply chain challenge in the future.
Okay, understood. So, please correct me if I'm wrong. So, does it mean that for all the customers, Anshulji, some level of customization is happening? Like, for example, some customer wants a particular grade of waste paper. Based on his requirements, I think you cater to his requirements. So, is this understanding right?
Yes, Mr. Avinash, that is right, and not just what the requirements are, but because we are technical engineers ourselves, we have we are also able to inform them on if sometimes their requirements are overspec or underspec,
Okay.
right? I'll again explain this with a very simple example. Let's say you are a mill that is producing, your A4 paper, those paper that goes for printing. This one of the key quality metrics which determines the price of that finished paper goods is the brightness. How bright is it? And that brightness is dependent on a bunch of factors, including the process, but most importantly, the raw material that you are putting in. Right. So let's say, as an example, you want to produce a finished goods paper with a brightness spec of 80 out of 100, right? 100 being super bright, 80 being like fairly bright. There's almost a recipe optimization that can happen, that you have got 4 different types of waste paper grades, right? One is 85 brightness, one is 75, one is 70, right? So how do you best optimize what is needed to make sure that you get as close as to the finished spec whilst paying the lowest amount of cost? So even
Yeah.
these kind of nuances and technical optimization we are able to do with our mills,
Okay.
right? And again, our intention is with our technology platform and with our AI enabled platform is to make this more and more seamless
Okay.
and more driven.
Oh, understood. I think very nicely articulated, Anshulji. Anshulji, now tell me one thing. From where do you actually source this raw material? That is, waste paper comes from where? I mean, do you have some overseas arrangements, or do you buy from the open market? How does the overall inventory management work like for your customers?
Yes. So almost all of our waste paper comes from international markets, right? I think if I again just take a step back, because I appreciate this is a supply chain that our viewers do not have heard about. If you just think from a logical standpoint, take a step back, where does this come from? Any kind of recyclable waste, whether it's paper, whether it's plastics, whether it's metals, whether it's your batteries, e-waste, all of it is a function of consumption in the economy. The more an economy consumes, and the more it is better in terms of recycling, the more you get these recyclables that then need to feed back into the circular economy, into the end reprocessor. In the case of paper, that is a mill. In the case of plastics, it is a reprocessor. In case of metals, it's a foundry, as an example. So so if you think about it, consumption, recycling rates, ESG laws, infrastructure, all of these are better in the West, but they do not have the manufacturing. The manufacturing and the end processing is mostly in the East. So this creates a very natural global flow of recyclables from West to East. So if you look at now, if I talk about Exim and paper, where does our sourcing comes from? It comes from some of the top markets: US, UK, Europe, Africa, Southeast Asia, right? Be it Taiwan, Singapore, and so on. So these are some of our key markets. We, like I said, with a unique structure, we have got subsidiaries all across the globe: Singapore, South Africa, UK, US, Germany. We have got 5 subsidiaries. So these subsidiaries essentially work with the local yards. A yard is essentially a facility which collects, sorts, and bales the recyclable paper, right? So we work with these yards, onboard them, check their quality, and then work with them on a regular basis to help procure these materials. There is no like long-term contract as such, because again, the analogy I would give over here is, think of it like a crop. This is a crop. It's coming in, you process it, and you have to send it out. You cannot dump it, you cannot burn it, right? You
Right.
cannot do this. So it's almost like a running cycle.
Okay.
So whilst there are no long-term contracts in place because the dynamics of the supply chain, but there is ongoing collection, ordering, buying that happens from our foreign subsidiaries through these yards.
Okay, understood. Anshulji, now from a customer point of view, since this is a B2B business model,
Yeah.
which are the kind of companies? Do you supply to any prominent Indian companies? If you could give us some names if possible. And secondly, what is the total active customer base for us? As of now, how many customers do we cater? If you could please tell us.
Yes. So, in terms of our customer base, whilst I've spoken a lot about India, and India is our predominant customer base, we actually also supply to paper mills outside. So, we supply to paper mills in Europe. We have also done it in Sri Lanka, Africa, right? Even Nepal and Bangladesh, we have done a little bit. Like I said, our core is India because such a big market. Within India, we supply to more than 50 plus paper mills. Some of the top paper mills that we supply to on a regular basis, as an example, talk about NR Agarwal, right, which is one of the listed companies. Shripati Paperboards, GBG in the south are
Yeah.
other prominent names, right? So obviously those are prominent names, but we supply to 50 plus paper mills across
Okay.
India. These are some of the
Okay.
largest names in the industry.
Okay. Fine. Anshulji, now as far as the pricing goes, I think since you say that you import the waste paper largely from global markets, typically, how does the pricing work? Like, for example, if there is a price increase or a dollar kind of appreciation, rupee weakening, now how are these price adjustments factored into the price? Like, is the price increase passed on to the customer, or is there any fixed contract with large customers whom we cater?
Yeah. So this is all almost done on a spot basis, as I said, right? There are no long-term contracts in place. But the good thing about the supply chain is that there is no inventory management. It's a continuous flowing one. And also because of actually international import, export, and ESG regulations, what tends to happen is that when you export something, you have to declare who the end processor is, right?
Yeah.
So what that tends to do is it's a very dynamic, quick buying selling cycle that happens. Now, in terms of your specific question on forex currency appreciation or pricing, the way it works is, we on our platform get offers and demands in real time, right? So if a yard has some material, they can put in the offer. Our system will automatically calculate what is it in terms of US dollars, and that offer will get surfaced to the mills in real time, and vice versa. And the billing happens in US dollars and the payment happens in US dollars. So for the most part, if you talk about risks of currency appreciation, all of that gets covered naturally. We also, as a company, and we are the only company to do it, that's one of our USPs, is we also offer high C sales. Now, some of our viewers might think, well, what is new in high C sales? Those who are in this business, import export, would be like, it's normal. Well, it is. But if you look at this industry and our competitors, and sorry, I'm jumping a bit ahead for context, but this Indian import of paper recyclable industry has been dominated by major European and American companies. They don't deal in high seas, right? Because they want payment assurance, so they always deal in dollars and LC. We are the only Indian company, right, that is in this space, going head to head with these foreign behemoths, and we're already at the cusp of top 10 in India in the space. So we offer high C sales to some of our select customers, right? And through that, we are able to basically, hedge and give them certainty of the INR. If I give you a classic
Okay.
example, in the last 4 weeks, 2 to 3 months, you must have seen the dollar to INR appreciate from 86, 87 levels to 90.
Yeah.
We were actually able to save, lakhs and lakhs of rupees for some of our mills, because we were able to do high C sales and help them with
Okay.
forex management,
Okay.
right?
Fine. Understood. Uh, Anshulji, now let us. I would like to understand from you, in terms of the total addressable market. I think in your introductory remarks, you mentioned that waste paper is a very large component imported in India. But
Yeah.
what is your thought on the overall opportunity for us? Like today, we are at a particular level of top line. In the next say 3 to 4 years, do you see this demand growing increasingly and a sufficient space for us to grow over the next say 3 to 4 years? Because waste paper is a critical raw material, as you rightly mentioned. So, your thoughts on the growth of the industry and how do we plan to capitalize on this growth?
Yes. I'm going to give you some latest figures. I was in PaperX last week, which is the largest paper conference in the world. It happens in India, New Delhi, once every 2 years. And we had some very senior government officials come in and talk about the growth of the industry. So these are like literally latest figures from last week for your viewers. The projected growth of finished paper goods demand in India is expected to go from 23, 24 million tons of finished paper goods to 30 million tons. And if you think about it, a lot of this demand is being driven by e-commerce and quick commerce. All those Amazon boxes and
Hmm.
Blinkit
Exactly.
and Swiggy boxes in which the Indian economy and consumers are ordering. So there's a very healthy growth in terms of the finished goods demand. Like I said, 90% plus of paper mills in India are relying on recycled waste paper for the raw material. So finished paper goods demand will translate to recyclable waste paper demand. Today, it is at around 12 to 14 million tons. That is projected to increase in the same ratio as finished paper goods demand will increase to 16, 17, 18 million tons.
Correct.
And whilst the Indian government is doing a lot of initiatives to promote domestic recycling rate, the domestic recycling rate today is 20 to 25%. It will take some while for the systems to be in place so that we can get to 40, 50, even
Correct.
60%. Right. So if I take the midterm horizon of 3 to 5 years, right, the demand for recyclable paper from international markets is only going to increase. Today, it is already at 6 to 7 million. We see it increasing quite easily to 8, 9, 10 million and beyond, right? Very easily. If I talk about for Exim, right, obviously our platform is well catered to that on the paper side, but similarly, you've got demand increasing on the other segments, other recyclables as well, right? EB is a good example of that again with the
Yeah.
rise of, if I make one adjacent example.
No, I understood. I think very nicely mentioned by you. Anshulji, now before we talk about the financials, I want to understand that in our business, basically we are suppliers of waste paper to the paper mills, which is the basic raw material. What are the qualitative kind of factors which actually actually qualify you as a much better player compared to other players? Like for example, what is the value add we offer to
Yeah.
customers, whether it is surveys, quality of the paper, your platform which you mentioned. Two, 3 points if you could tell us, how are we different from others and how are we
Yes.
doing our job better? If you could please tell us.
Absolutely. So again, in the spirit of trying to educate people in this industry a little bit better for common viewers, it's important for us to understand how this supply chain has traditionally worked, right? Like I mentioned before, this the supply chain is manual, offline, and not data led at all. But others, it is also incredibly broken in terms of intermediaries, right? So let's say I'm a mill in India and I want to procure, let's take a very simple grade like OCC, your Amazon boxes, which are called old corrugated containers, right? Now, how will I procure that? The way it will work is I will have what are called commission agents or indenters, right? I will basically make a phone call or a WhatsApp to my network of three, four, five, six commission agents, right? Those commission agents sitting in India will essentially, have a principal, right, which would be our competitor in the traditional sense. Would be one of these big European or American principal companies, right? They would then basically make a call to one of their local brokers, right, or one of their employees in countries, and those brokers employees will then get in touch with yards, right? So so that is essentially how this entire value chain works. There is no assurance or very limited assurance of quality. Forget assurance, even visibility, right? So a mill is ordering something, they will get a price, they will get some basic quality metric, fine. They'll make an order. 2.5 months later, the shipment arrives. You open it, and you have no idea what you get. It could be a different grade. It could be completely different quality metrics. And for the mill, whom do they speak to? They speak to the inventor, who then speaks to the principal, who then speaks to the. So it's a completely fragmented value chain, right? Supply chain. And because there's inefficiency, it builds up costs. So every player then adds on their margin, right? Because if the mill asks me quality, I need to pay out of my pocket and so on and so forth. This is how the value chain works today. What is different about us, even before I talk about our data and technology, is our business model. We buy direct, we sell direct. There are no intermediaries in between. We manage the entire end-to-end value chain from sourcing. So we get source from the yards directly. We quality and audit check the yards, so we know what quality we are getting, right? We have direct connections and our own network of freight forwarders and logistic providers and shipping lines. So we manage that entire logistic shipping lines network. We take care of payments on both sides. And when the shipment comes to India or to our customers, we have our own in-house quality assurance team, right? So if there are any issues, which are very rare in the first place, but if there are any quality issues, our in-house quality team of technical engineers is on site with the paper mills, helping them out. And that whole feedback is passed along as well to make sure that those quality improvements are reflected in the yard the next time. So first of all, just in terms of business model, that is a number one USP that differentiates us from other competitors. Second, like I said, our people. Right? If you look at a management team, I'm speaking right now, but our management team, all of us are paper polymer engineers from IIT, but also all of us are geographically distributed. So, as an example, I'm the global CFO, but I live in UK and head up our UK and Europe sourcing. So, I manage those relationships, those yards, those sourcing directly. Similarly, our CTO is ex Amazon. He actually launched Prime Video globally. He sits out of US, handles our US sourcing. Our CEO sits out of Singapore, used to manage supply chain operations for the likes of Zilingo before this, right? As an example. And then our CEO, founder, sales team, quality team sits in India. So that's our second USP around the type of people that we have brought in and where they are and what roles they play. And third is obviously our data and technology platform that we have built up, which essentially not just integrates the entire value chain and ecosystem of partners, right? Be it shipping lines, be it freight forwarders, be it yards, mills, be it financing partners, but also enables the transparency and quality assurance and payment assurance that is so much valued by our suppliers and customers.
Well, I think very nicely mentioned by you, Anshulji. Anshulji, now on the financials, I was just seeing that your numbers for FY25 has been very strong. Top line of 120 crores from 73 crores, and bottom line has also increased quite significantly to 7.5 crores. And this progress has continued in the first half also. So I just wanted to understand, sir, what have been the key reasons for this improvement in profitability? Such a strong improvement in the profits for last year as well as for the first 6 months. Any positives on the price increases or the volumes you handled? What were the key reasons for this improvement?
Yes, I mean, a couple of reasons, but obviously, first and foremost, our volumes increase. Right, we basically opened up our UK and South Africa subsidiaries in 2024, which have been pretty big, important drivers for us in terms of our sourcing. So that's obviously been one. Right, without going into many details, if I talk about the last 18 months, we have we have 4x our sourcing base, just in
Correct.
terms of what we actually do. And if I talk about our overall inventory,
Okay.
we have got more than 1 million tons per annum of inventory on our platform, right?
Okay.
So that has been obviously one big source of growth.
Okay.
Second is, if I talk about our bottom line, uh, early towards February, March 2024 is also when we officially launched our ERIS platform, right? And whilst initially we used it more for internal purposes, but as we brought in those connections of mills and yards, that has also allowed us to scale without necessarily increasing our team size. So from an
Okay.
operational standpoint, right, and even if you look at our employee expenses, they've actually come down even
Okay.
whilst we have increased
Yeah.
increased our volumes overall through the
Okay.
platform, right? And that's a trend that we continue to see into this year and beyond.
Okay. Okay. Now, Anshulji, if you could tell us another thing, like now the most important question of the interview is regarding the IPO. If you could tell us,
Yeah.
sir, what is the size of the IPO we are planning and what is the money going to be used for? If you could please tell us.
Yes. So we are planning for a gross issue size of roughly 44 crores, 43.7 crores to be precise. Um, in terms of our proceeds, our proceeds are basically going into three things. There is part of the proceeds around 9 crores, which has been earmarked for working capital, and 6 crores roughly for GCP. Right? So that's one pool of money proceeds. Um, the second proceed is basically to build up our capital assets. So we are planning to invest into an office space, and the reason is because we are increasing our team and bringing our tech in house, essentially as part of our post IPO growth plans. And
Okay.
the third pool of money is reserved for our technology platform, right? So there are a lot of things that we have planned on technology platform. I would say we are right now on, really 10% there of where we want our tech platform to be, both in
Okay.
terms of digitizing the entire supply chain, but also connecting the entire ecosystem, bringing in more
Okay.
freight forwarders, more invoice financing partners, more mills, more yards, going beyond paper into other recyclables, and offering a lot more value added features. Ultimately, our vision is that we want our platform to be the procurement planning tool for mills all over India and over the globe. That's our
Okay.
long term vision. So that's the third big pool of proceeds from the IPO
Okay.
onto our tech platform.
No, no, understood. Anshulji, now let's talk about the working capital side of the business. I believe, the working capital management is very critical for us. In fact, how quickly your customers pay you, because last 2 years, I was just observing your balance sheet and your prospectus. The working capital cycle seems to be negative. So, after the public issue, hopefully, Anshulji, can we expect this operating cash flow cycle to become positive for us?
Not immediately is the short answer, right? I mean, if I talk about a working capital cycle, it does ebb and flow, right? This is a B2B business, and there are phases of higher supply, higher demand. What we kind of foresee is, I think for us, the first and foremost priority is ensuring that we continue to scale in terms of our supply base and our customer base. So obviously that will mean that our working capital cycle and our CFO will continue to be negative, right, in the short to mid term. But what we are also seeing is that ratio going down. Right? So in terms of our ratio, working capital negative cycle vis-a-vis the overall top line, we see that ratio starting to come down, and that will happen. That will happen because of three things. One is,
Okay.
as we grow and as we scale, we expect to get better terms from our suppliers in terms of credit, and the same on the mill side. Second is, like I said, we are planning to bring in more invoice financing partners onto a platform. Right? So that will definitely help us essentially, shorten the gap on our working capital cycle and our CFO, right? And third thing is obviously is that at some point, in the midterm, right now our platform is a closed marketplace. It means Exim Routes, i.e., we buy and sell directly. But over time, we are also planning to bring in some trusted, verified partners, which
Okay.
means they'll be the ones who will put their money up, and we will charge for our value add services. So that will also contribute to our top line, but not impact our working capital, right?
Okay.
So I hope that helps answer the question for you.
No, I think very nicely explained, Anshulji. Last question, Anshulji, which we ask all the promoters and the top managements. Sir, we have seen COVID. Now, after COVID, what is the normal business risk in our kind of, business? Like, what is the most important risk you monitor every day when you come to office?
Well, I think obviously working capital and cash flow cycle is obviously one, especially as a bootstrapped
Yeah.
pre-IPO company. I'd be remiss to say that is not the first thing that both me and Mr. Manish, who's the CEO, look at first thing in the morning.
Yeah.
Um, but beyond that, I mean, you mentioned COVID. So if I had to pick the other one, right, I think the other key risk that we are seeing and we are building resilience towards is supply chain, right? So if you look at this entire supply chain, logistics, both the cost as well as the transit time plays a key role in this entire supply chain. So for us, that's obviously a big risk. Not just COVID, but if you look at the Red Sea issue, when that happened and the impact it had on global supply chain shipping routes. Similarly, with some of the recent tariff announcements and how that impacted some of the supply chain routes with finished goods demand into US and vice versa. So that obviously is one of the other key risk factors we see. And I'm proud to say that the way we are structured, that's why we are the only Indian company with subsidiaries outside. We source from 15 plus countries, and in the way we are building our platform, that we can integrate all these shipping lines and routes and provide optionality to our customers, makes me confident that even if supply chain continues to be dynamic and volatile, we will be better placed than our competitors to find the most optimal solutions for our customers and suppliers.
I think it was great chatting with you, Anshulji. I think please accept my best wishes to you, your entire management team, and sir, please also accept my best wishes for your forthcoming public issue. Thank you very much.
Thank you so much, sir. Pleasure speaking with you.